Okay, good morning, everybody. How are we today, this July 15th, 2021? It is Thursday night, and you are with with UFOs Nailing FX US session right here on FX Street. Hopefully, everybody is keeping safe out there. Just the top there, just take note of the disclaimer. Read that as it scrolls through. And if you are new to our sessions here at FX Street, we trade with UFOs. If you want to find more about us, you can go to tradewithufos.com/Andrew, and you can find out more about our apps, our courses, and our coaching. And you can get a free membership there. So please do go and sign up. And we have a newsletter that comes out every day that talks about the various markets in focus. So that would be usually like the S&P, gold, oil, and the US dollar index. So do go and check out also a YouTube channel where we also have Becky O'Boyan talking actually through that newsletter. So and explaining it and how to read it and how to benefit from it. So please do go out and check out their very short little market commentaries on our YouTube channel. All right, so let us get into the market straight away. Looking at starting with the dollar and just taking the big picture view from a daily perspective, which we have here. And actually, if we turn on our UFOs here, I'm going to do, right? What that is going to do is just identify an area or areas of interest where we can expect some buying and selling. So if you are new to our technology, we do have auto UFOs, which identify if they're red, areas where we are interested in selling a particular market, in this case US dollar, and areas at which we are interested in buying the US dollar index. And so you notice here that we have kind of a solid green colors here, and we have here more of an olive green. So the difference between the two is that if it's olive green, it's an area which has been traded before, so there's interest in that area, but we have seen price kind of trade in that area. If it's lime green, then we haven't seen price come down to that area yet, and so there's still would be more opportunity or interest, I should say, in these lime green areas than the olive green areas. So there is interest, but not as much as if it was a brighter green. Okay, so that's just a little bit of orientation there of what those colors mean. And then what we have down the bottom here, and actually I'm just going to remove these other little indicators there, are the auto UFOs is up here, and the auto climate is down below. And what that tells us is whether the climate overall for the market is has a bias to the upside or a bias to the downside. So if you see here, we actually have just comparing, say, the red, solid red dots to those dots which are smaller. What that just means is that there is no confirmation of that trend or the seller's market. If it's not solid, if it is solid, then there's a confirmation of that trend in that particular direction. So we have predominantly blue here, which means that overall the market has been very bullish. If it's red, it's predominantly the market has been overall bearish, and where there is no solid dot, it's kind of no real direction. So if you look at those differences, then or if you understand these, the red, the bearish case, blue is the bullish case, then what we're looking for at the moment is more buying opportunities versus then selling. All right, which kind of makes sense because at the end of the day, if we do some sort of trend line here, we do notice that prices are moving up, and so overall, in any case, the price action is in an upward direction. Okay, so let me just that's clear. Okay, so the dollar is over bullish, and so there's been a lot of talk around inflation, interest rates, affecting the markets, affecting the market's view of the future, and therefore it has had an impact on the dollar. And in particular, I think as we saw back in about a month ago in June, that move to the upside, that very strong move to the upside, and ever since then, we have had more of a measured type of move to the upside, and I would expect continued moves to the upside given the overall sentiment, even though currently we're in more of a lower time frame sideways action here, right? So, but overall, I'd say we've got to be bullish until we reach this area up here. So don't put away your buying sort of your buying hat just yet on the dollar. And intuitively, what that means is that for the euro, again, from a big picture perspective, we've got this downward move. The dollar index is predominantly over 60% made up of the euro, and so we can kind of expect that this inverse relationship, right, with between the dollar and euro in particular is quite strong. So again, we see a bit more of an inverse relationship here, where there is an opportunity for us to target taking profit around the sort of area above 117 while maintaining an overall selling stance, right? So if price ever comes back up to this area here, which at some point it will, we can still look to sell here, given that the overall trend is still at least for that leg down to the downside. But overall, if we kind of pull things back a little, we do see this kind of like a sideways action going on here. Really, is the bigger picture, right? But at the lower time frames, we'd be looking for an overall selling opportunities here. Okay, so if we do go down to these lower time frames, so if you're a little bit more of an intraday trader or swing trader, then you're probably interested in these lower time frames where we're able to see again this bias, right, to selling. And so we draw a line here, and you may use moving averages, you may use other Fibonacci lines, however you want to, whatever is part of your trading strategy to identify opportunities. Using the UFOs can benefit you by aligning, right, to where those UFOs to your strategy. So even here, as we almost got up to this area of selling, we expect sellers to come into the market, we probably going to see some buying down here, and this sort of zigzag type of, draw these zigzag lines to get a sense of a bit of a wave count, right? Also guide your eyes in terms of identifying where price could go in this overall move. So even if we did, right, and often you will see, price action where while you do have this trend line, because there is this layer of opportunity here where sellers have tended to come into the market. So even if you look at this prior low that was broken by this move here, right, it came back to retest it, came back down, retested again, came back down, tried to retest it to make it, but then we could see buyers come in, tried to retest this area again. If it doesn't make it through, then we could see a break here, right? So this sort of move up here could, right, it could continue up, right? We could see continue buying up here. That's also possible, but we would need to see these highs, right, kind of get cleared before we see continuation to attempt to reach this 120 area. So when we're looking at the euro, probably interested in looking for opportunities to go short if it comes up to this 120 area. Otherwise, potentially a continuation to the downside here, right? If we have these lows continue to break. Now, another perspective that we can gather from auto climate on this time frame here is, there's overall weakness in the market, and that's kind of what we saw as well. If we pull back to the daily time frame, right? So overall in that day time frame, we do see weakness, right? And then going down to those lower time frames, that's why we still can have this bias to go short, even though we do have periods where there is buying, right? Overall, the tendency is for the euro at this point to head lower. Okay, but even if it does get back up to this area, that's still fine because prices are still pushing lower. Right? We had that strong move here; it hasn't been able to get back up to that point, and we see these prices moving lower. So that's what we see on the euro there, kind of inverse to the dollar. Now, what's also interesting, I'm just going to turn off the UFOs here okay, is if we look at Aussie is also being quite weak. Just pull things back to the bigger picture, right? So after we broke this range here, we've not been able to recover, right, from this downward pressure. So while the overall picture, we have this, we've had this overall upward move here. I could just draw a couple of lines here. We're rolling over, okay, rolling over to the downside, and we're going to see this in the commodities, commodity currencies. Although for crude, for Canadian, it has been strong, right? So if we do this, just change the color here. So you look at New Zealand, you're going to see similar structure to the Aussie. It's holding up a little stronger here at this support area. But the Canadian, we've seen that weaken alongside of oil, right? So along with the strength in the dollar, we have seen this this weakness really in Canadian in recent last couple of weeks, and that's probably a bit of a reflection there of where oil could go, right? So if we just where is my oil gone? Disappeared. Let me. So let's just look at WTI. And of course, if you're aware of oil, you know that there's been discussions, right? OPEC, are they going to increase their supply? Are they not? So you see these sorts of reactions here. So it's heading higher up to, kind of touch that 70, 77 level, broke lower, tend to come back up again, and now we're heading back down. So we have a lower high set up here. We break these lows here, then we'll probably see oil heading lower. So we just go here, right, that low here. It's high up here. So we're not getting any higher highs. We've got a lower high, and if we break this area here, we're going to get lower low and potentially a move down towards at least this 60, 67 sort of area. So if you kind of draw your eye to this prior high here, it's around 68, that area there. So even if you go short here on the break, or if you have another retracement to put in a lower high and then another move to the downside, then that could be one target there that you could consider at 68. Otherwise, you've got these other sort of areas where price had some trouble moving lower at, more as targets than anything else, not so much for initiating entries, but that's something that we also need to look at in the context of what the oil producers are doing. And of course, we're kind of still in the summer periods in the US, so to the extent that people are able to drive and get out despite what's going on with COVID. Yes, gas prices, I believe, are a little bit expensive these days, but nevertheless, if we do see a fall in oil, then it's something to take note of and consider if that's what you want, where you want to target, right? Whether it's this 68 level or all the way down to like this 58, just above, close to this 58 level. So that's a good $10 move if you're a swing trader in that sort of sense. Okay, so that's kind of in the context of what's going on with dollar CAD there. So if we just think about what's going on here with dollar CAD, and again, these are high time frames that we're looking at, but for context, right, in order to understand the context of what's going on, we do have this 126 area. If I just round that out, 26, so to break that 126 area, then we probably want to consider continuing to be bullish on dollar CAD, which is in the end of the day bullish on dollar, and weak on CAD. So if CAD decides to, be really weak, and dollar decides to be overall very strong, then that's where we get continued, pushes, impulse moves to the upside there. So again, just something to keep in mind. That 126 level, if we are able to break that, then the markets have the potential of continuing to go higher. And so on any sort of pullbacks against that trend line, that's something to consider when those things happen and occur. Okay. All right, and of course, auto climate is telling us overall as well that you probably want to keep a bullish stance. Now, if you're an intraday trader or a lower time frame trader, this is kind of where you just jump down to these smaller time frames. Maybe you kind of adjust your, kind of refine your line a little bit better, and kind of map things out so that if we do have this area here where we've got a prior high, where price did tend to react to maybe above that 124 level. So kind of want to watch this area here. So 124.40. If we get prices moving around this area, and maybe you want to go down to 124.25. Put that down there, right? And so kind of map out this potential move, comes back down to the trend line, hit there. We may want to have expectations of maybe this type of pattern, right, emerging to the upside. So if you really like to go down to some of the details to get a better view of things, you can go down to the hourly, and again, kind of get a sense of where you would like to enter. Do you want to use Fibonacci's? Do you want to just use a simple trend line? There are multiple techniques that people use, and of course we do have our auto UFOs. So we turn those on again. So again, here we see it highlight a couple of opportunities. The long side kind of disappeared. Let's see if it comes here. Yep, there we go. So it's really this area here. We also have these small areas, small area down here. And we have to get through this resistance up the top here. Just jump over, where is the origination? There it is. And as we've seen here before, right, even if I just start from this point here, there, right, we have seen that that's a good area of resistance. And so the question is, as we move up to this area, are we going to react down, or are we going to see this price react, come back down, and then one more push higher to break that 126.50 level? Okay. So the key, right, is to look at the bigger picture, get formulate your view of where is the market moving overall, where is your bias going to be? Is it going to be to the upside? Is it going to be the downside? Dollar CAD is overall to the upside for not only technical reasons, but also with oil looking potentially weak, which has an effect on the Canadian dollar. Then that kind of also leads to this potential for price to move up to beyond that 126.50 level. So we just have to be patient, plan for some pullbacks and just control your risks there. So what else do we have? Let's also look at the yen. Let's go back to the daily here. Just going to turn off the UFOs for a little bit, just so that we can look a little bit more unencumbered. So what's interesting here is we do see this upward trend line. This kind of area has been holding. It's kind of trudging up, but now we start to see a little bit of weakness coming in, right? And it's been a little bit weaker than some of these other pullbacks. That wasn't as strong as that pullback here, which kind of set the scene for this upward trajectory sort of move. And so, what is going to happen here? Are we going to see a stronger yen come in versus dollar? And if you're familiar with the carry trade, you know that, especially if we can jump across to the Aussie yen and take a look at that. And if we don't get past this high here at, say, just under 112, 1165, that high here, if we put in a low here and we break this area, potentially we could see prices head down lower, and that's more a function, right, of the yen, in of itself versus anything to do with the dollar, because the dollar, it could be very, very strong versus the other currencies, but sometimes these currencies move independently, right? And so one way to look at, if you're new to currencies, the way that we look at the various groupings of our currencies around commodities, right? So the countries that export a lot of commodities are, of course, Australia and New Zealand. They export a lot of Australia iron ore, produce, and that's in particular for the New Zealand economy. They have a lot of produce that they export, fruits, vegetables, meat. They don't export, any sort of iron ore or anything like that. So their main driver for their economy is in particular for the demand, right, for New Zealand dollars, because this is what we're talking about here is global trade, right? And so that's where we have to look at and I guess not only the exports of what the country exports, but also the imports of goods as well as services, which then facilitate this global trade, right? So Australia and New Zealand tend to be more the commodity currencies, along with Canadian dollar, of course, is very much linked to oil, right? And so as we look at the various movements of currencies, those are the major influences, right? And so that's why even if say dollar index is very strong, right? We could see some independent movement of some of these other currencies, right? Where the dollar yen is very weak, right? Which means that the yen is strong, the dollar is weak, relatively speaking. Even though if we look at the other pairs to the dollar, the dollar is showing itself to be very strong, right? So commodity currencies, those three together. Then of course you have the safe havens, which are the yen and the Swiss. So Swiss, as we know, is the European, it's known for its being neutral, right? Although Switzerland has changed over the years in some respects in how it's been seen, but at the end of the day, it's still considered a safe haven place to put your money, and therefore the Swiss franc is seen to be, if there's any sort of movement to safety, then we do see still some demand for the Swiss franc, and the yen. Of course, we know that Japan is a very big economy, and when it comes to interest rates, they've been pretty much zero for a very long time, and so this idea of carry trade comes into play. So that's why there's a lot of interest in the yen pairs, and in particular yen versus the higher yielding currencies, which at the moment, dollar is one of those relative to Japan interest rates, and of course Australia, New Zealand, Canadian, euro, not so much because the European countries are in negative interest rates, but still you see certain relationships between the euro and the yen, but more so I think with the clearly with the higher yielding interest rates in those sorts of countries. So the yen is a safe haven currency, right? So risk, when we look at the dollar, of course, those dollars that are converted from yen, right, will go into U.S. Treasuries, which of course are going to have higher yields than zero. They're going to go into equities, which also makes sense because dividends. Dividend yields are still quite okay, right? Or there's many places that you can get dividends in the US markets, and of course you've got dollar-based, commodities, gold, all this sort of stuff. So that relationship between the dollar and the yen is also something to watch, and as I was mentioning before, can move independent of the other currencies. So dollar yen. Let's look at the Aussie yen since I mentioned it. So as yen gets stronger, commodity currencies get weaker as flows go back into Japan. Right? That's what they're doing. If participants in the market wanted to hold Aussie because of high yield, but now they're concerned about what's going on in the economy, global economy. It's not that the Aussie economy is weak or there's anything wrong with the Australian economy. It could be just that look, they just want to pull back their money back to their country, back to their banks, and so they unwind their Aussie yen long positions, and so here's what we're seeing here is a rolling over of the Aussie yen, and potentially, right, we have if we can continue to move lower, then that could have an overall effect or an indication, right, of what we could see in the equity markets. So again, we can draw a bit of a trend line that overall prices are moving lower, and so in line with what the auto UFOs are saying, it's kind of telling us very nicely that we should also be looking to selling opportunities rather than buying opportunities, right? And so let's take a look at the auto UFOs now that we have a bigger picture view. So we have this area here of likely where there are sellers who are interested in selling, and again going down to these lower time frames to get a little bit better idea of some of the areas that we can be interested in selling at. Probably up this sort of area up here, so 82. It's kind of 82.50. current area that we could look to sell. It's a little close to some of the buying action, so we probably just want to wait for prices to come back up to at least this area here, or even if it goes a little bit higher to kind of hit that trend line, then another move to the downside. So let me put a little order in here just to demonstrate. Let's connect up some paper trading. Just turn up these order UFOs. See things a little better. Okay, let's see if this works now. So 82.50, we're short 82.50, for example, and let's put if we have a stop loss, 25 pips, that will put us just a little bit inside this high here. So I think let's take it above, say, 83, and that just gives a little bit more room for prices to move. And in fact, I would even say let's take it up to as high as 83.50, just so that we give it a lot more room to move. 83.50. Okay. So yeah, it's 100 pips, but look, if you're risking 50 bucks, right, and you're looking to take it all the way down to, say, even if it's 80, right, you're still doing a 2.5 to 1 type of risk reward ratio there. So let's just try that first. Get the order lines up there so that we can see trading and show orders. Okay. So and that's a great thing about Forex. If you use Forex, you can put position sizes which are not full lot sizes, right? So I'm going to make this 0. And let me just change that to 5 here, just so that because if you're using MT4 or MT5, then I mean, you can put little sort of small, kind of refine your lot sizes, but this is going to be a 0.05, right, lot size. So to make it 0.055, I've never seen, well, I've never done it myself. So not that you can't do it, but 0.05 is what this would be in MT4, MT5 world. So we can do it that way, right? So we just have to wait for prices to come up here to that stop. Let's click something there. Okay, there we go. That's better. So yeah, so for the Aussie yen, and let's take a look at the SPX just for comparison, right, for what's going on. So you see here we had this all-time high. We were really shy of 400. And does the market want to have one more go at it? Who knows? But what we do know is that we have new all-time highs. I mean, this thing is just it just keeps on going and going and going, and what's driving it is a lot of I guess stimulus money. For those of you in the States, you probably know what what money you're getting from the government, and are you saving it or are you spending it? I guess is the question. If you're saving it, then are you putting it in equities? And maybe that's a good little poll to do one day. What we should do is what are you doing with your stimulus money? Yeah, so we're getting this sort of kind of sideways action now. We had a bit of a move before, made new all-time highs, and now we're having a little bit of a problem here, trying to go even higher, especially since earnings are starting to come out. And so is this going to be what the market is going to start to react to. So kind of oscillating around this area of support here, but we need to see now some definitive moves to the downside to start to get this sort of price action like this, right? Sort of zigzag to the downside. So if we want to get a bit of perspective of what are some of the common sort of moves to the downside do we see? If we say, all right, if we go down to from this point to where's 5%, let's say, okay, that's 5.32. So if you get down to this area here, to this, let's say 42, right? Yeah, 4,200. That's going to be within say a 5% move. Okay, so that's not a so if you are going short, right? So you're going short from 47. Sorry, even if you get short at 43, right? 43.25. That's 125 points to the downside, and you go back and do the math on what that is, right? Okay, I have a question there. Thanks, Chris. Crude. Yeah, take a look at crude and gold. Yeah. Let me jump back to that. And the strategy that you're talking about, Chris, what are you referring to? Is that the using the auto UFOs and things like that? And I'll make sure I look at your questions there. Okay, but let me just finish up with the S&P UFOs. Okay, yep, I'll go into gold in this next one. But let's say that we go from this point up here, and what's a 10% move? If we go down to this point down here, let's see how far we're going to go. So that's 8. So that's about 9. So just about here, right? So let's call it 400, okay, or 4,000, right? Just to give us because these are targets, right? So targets. So let's create 10%. So around here, this was 5%. Oops. So yeah, so you go back and do the math, right, on what that is in terms of potential profit there, right? If you go short and you stay short, right? And there's a daily time frame, right? The daily time frame. So this could take some time, right, to really play out if it's going to move that sort of distance. But that, I mean, look, if if you're able to go short on things, then take advantage of that. If you are more of a hold type of player in the stock market, then you may want to set your points at which you get out, right? If you start to see price action heading lower and lower and lower, right? You may say, hey, let me just go to cash, right? And that way you keep those profits in your pocket, right? And don't see a drawdown. Okay. All right, so let's go to gold. Good one to look at. So again, let's look at the big macro picture here. What's been going on for a while, right? We had some downward pressure, right, some downward pressure. We had a bit of a spike above price and come back down again. And again, there's a daily chart, right? So when I say spike, it was it took some time, for prices to get above that trend line and then hit back down again. And then now it's putting in a higher low here, a higher low around this area here of support, right? And so what is it going to do? So it did this double bottom down here. There's been also some other areas of support here, right, around 1680, right? And now we've got something here at 1760. And yeah, so if you throw on the auto UFOs to help you identify where those areas of buying and selling are, let me just change that to maybe, let's see, it's not, let me change this to 24 hours. Sometimes it's just sometimes there's just something, I don't know what it is with the, what it considers daily, right? But, 24 hours, right? So this is going to identify an area of selling opportunities. Is an area of a close buying opportunity here. A little lower down is another area. Just put back the auto climate. So auto climate is telling us that the market is now turned bullish, right? Downturn bullish. And I'm just going to remove this downtrend line so we can see things a little clearer. And so again, I mean, you look at what has the price action been, right? It's been going up, Yeah, you have a bit of a retracement here, right? That's a deep retracement, it's not a small one. But yeah, what is it? What's going to have to happen, right? If we're going to get continued up move, then now you got to clear a 1920, right? 1920 gets cleared, then you're back up to 12,000, 2,000. Right? If we don't get that sort of break above the psychological 1900 and the 1920, then there's a possibility, right, that prices are gonna potentially, and especially if this leg becomes, it comes up here, and then if you have a sharp move down, then that gives you a downtrend, right? Visually, right? It's giving you that downtrend sort of move. So you draw things out. Drawing, I always like drawing, and so getting a visual, right, of the potential scenarios is something that you wanna do. And so what's going to go on for gold? You could argue, right, that we're still in this overall downward move, right? It tried to get higher, but it couldn't break, right? This 1950, right? Say 1950, 1960 area. So if you don't break that area, then you're not going to go high. You're not going to make 2000, right? Or 2001, above there. And we're going to be in this range, right? This is what could happen. So for the moment, though, the way to look at things is currently as bullish, right? So you want to be bullish to the buy side. It's got to get through this whole area here in order to put any give any sort of sense of moving higher, right? And so do your scenarios. That's what I would recommend is do your scenarios. Okay. All right. So if you want to find out more about our technology, so the auto climate, if you want to learn more about auto UFOs, these things that I've shown you here, those red circles, UFOs, green UFOs. Come to tradewithufos.com/Andrew sign up for our free newsletter, get that information, watch our YouTube videos, and just check out our website as well. So auto climate, right? What that does, it kind of tells you overall, do you want to be bullish or do you want to be bearish? So red is you want to be bearish, blue is you want to be bullish, right? And that gives the overall sentiment on that particular time frame, right? And so what we teach people, if you're interested in our courses, we show you how to use the technology, right, within the context of a methodology that we have, a simple methodology, which if you're new could be helpful to you. Even if you have your own strategy, it could give you some ideas about how you can develop your strategies even further. And so please do just check out our website and find out more about those courses, more about the technology, and how to use it. All right. Well, that's a wrap for me tonight. Thank you for your questions. Great questions. Thank you for asking about oil. Thank you for asking about gold. Hopefully, I was able to answer your questions there. And again, take care. Especially out there with all this COVID stuff. And we will see you next time. Again, go to our website. The calendar of events of when I'm on, with the other instructors and coaches are on, are out there. All right. Take care. See you next time.